This is Robert Kraft, and I'm your host on SNN.Network. And with me today for this Wall Street View is a familiar face, Mr. Brent Cook from Exploration Insights. Brent, welcome back. Good to see you.
Good day, Robert. How's things?
Good day to you, too. Things are good. Things are busy. How about you?
Yeah, the year's starting off pretty active in the mining and gold sector for sure.
To say the least. So let's go there. Last time we had you on was November last year, early November last year. Let's get an update. What's been going on?
Since November of last year. Well, we've the market came back in the mining sector, especially the precious metals. Gold is at like 1572 right now.
Mhm.
Silver's up above 18. Palladium's done really well. Nickel's done well. Copper started to pick up a bit. The rest of the base metals not so well. So yeah, it's an improvement.
Mhm. Well, I mean, for you since then, I mean, how does some of these news articles? Because we've talked at length about how short-term spurts in price increases, that doesn't necessarily mean that you're now going to see a ton of action in junior resource because even with that, there has to be a lot of planning that goes in place in order to take advantage of these moves in pricing. So how have you seen the junior resource space react to all these increases?
Well, it's actually been a lot tougher, at least in the smaller mining and exploration companies that Joe and I follow in Exploration Insights, because a lot of generalist investors and such they're investing in passive vehicles, if you will, like ETFs and that sort of thing. And in so doing, the real money needed for exploration and mine development is not reaching the companies that need it. So there's been a real dearth of new money coming into the sector, which has made it tough for companies to go out and find new deposits and do the works required. I mean, yeah, I've mentioned this I think before to you, but we're on a global basis, we're producing 90 million ounces a year. And that's about what the Carlin Trend in Nevada has produced since discovery.
Mhm.
And likewise in copper, we're producing or mining through about one Bingham copper deposit a year. And neither of those, go ahead,
I was going to say by we, are you talking about the U.S. or globally?
on a global basis,
Okay,
on
okay.
a global basis, right?
Mhm.
So we're not finding one Bingham copper a year and we're not finding one Carlin a year for sure. So looking forward, it's getting tighter and tighter. The spring's being pulled back, if you will, and new discoveries are going to be worth a lot of money, and so it's going to be a fun space to be in over the next few years if you're into the right stocks, an early discovery or development play.
Mhm. All right, so let's dig in there. I mean, where are some of these potential new discoveries? Where could they be located? Is it all dependent on those various geopolitical factors? I mean, where are they located
Yeah, well,
potentially?
everywhere really.
Hmm.
I mean, there's deposits scattered across the globe. Certainly, the Ring of Fire, the volcanic chains around the Pacific Ocean, that's where the majority of mineral comes from, and that's where there's going to be new discoveries found for sure. The Tethyan Belt that runs from basically through Mongolia, Iran, up into Serbia. That belt of rocks in Turkey, there's a lot left to be found there. There's been a lot of discoveries made in scattered countries throughout Africa. Just last year alone, I visited Japan twice, South Korea, Australia, and Finland, which are kind of new regions to be exploring. And there's discoveries being made there. Surprisingly, I went to Japan and like, wow, this is new. It hasn't been explored in 40, 50 years. So they're being made, but it's very selective.
Hmm. Well, I mean, and I asked this question to Rick yesterday when we did an interview about how, I remember a few years ago when you start to see these price increases in the overall price of these commodities, that they're now some of the institutions or even larger mining companies that have cash to spend tend to then put some of that money in these riskier projects. I mean, are you seeing some of these similar trends happening right now too?
Certainly, the larger mining companies are starting to fund junior exploration companies, either via private placements or joint venture deals. So they recognize the looming shortage in economic mineral deposits. The retail sector is still sort of licking its wounds, if you will, from
Mm.
the past few years. But interestingly, well, one fellow, Eric Sprott, who is the biggest name in the sector probably over the past year, has put in the order of $250 million into junior resource stocks alone. So smart people are putting money into valid concepts, legitimate companies with honest management. So
Mhm.
it's happening, but slowly, if you will.
Mhm. So you actually mentioned earlier that there's, a dearth of new money coming into the space. I mean, other than obviously finding new Carlin type projects out there, what could also be some other catalysts to see some of that new money coming into the space?
Well, certainly rising metal prices. I think looking at the big picture, the global equity markets, certainly the U.S., has been on a tear, unprecedented tear, and that's been primarily based on cheap money, free money, basically.
Hmm.
That's what's funding that, plus these tax cuts that allowed the corporations and such to buy back their shares. Uh, how long that's going to last, I don't know, but it's certainly much closer to the top than the bottom. And I think the US dollar, which is the reciprocal of the gold price, US dollar is more likely to decline versus rise. So I think that'll help the gold price. Certainly the global debt situation is a disaster. And then you look at the geopolitical front with what's going on, I mean, a lot of places, especially Iran, as you've seen the past week. It's there's a trend towards money going into precious metals. So I think that's going to continue into 2020.
Hmm.
And I think we're going to start to see legitimate discoveries being recognized and stocks going from 20 cents to $2 to $15 possibly, depending on what they find. I mean, it's interesting. You look at the exploration sector, and it's very similar to the biotech sector in that you're looking for a cure for whatever, cancer, diabetes, whatever. And if you've got an early stage idea or concept or product that might make it, those little companies just rocket
Hmm.
even before they get through the 1, 2, and 3 phase of trials. Mining is exactly the same in that a little company can go from 20 cents to $2 on a successful drill hole before the deep feasibility studies and economics are done. And so there's a lot of money made in that.
Hmm. But what would you say to, let's say, the long-term generalist investor that might be saying, well, okay, I get your analogy on junior mining with biotech, but with biotechs, you know, even yeah, there's that same time frame of, let's say, from molecule phase one to FDA approval, but it's not dependent on the commodity prices. So, let's say you're talking about a junior exploration company that might be, as you say, taking advantage of the, frothy market, let's say, or maybe a soon to be frothy market in the near term, but they're getting all this money, but yet it's still going to be 5 to 10 years until they're developing mine. And who knows, by then that commodity price might be significantly down from where it was today. I mean, how would you respond to a question like that?
That's a good point. Really good point. I think the difference is that, um, as I said, start off, we're burning through 90 million ounces of gold a year.
Mhm.
Uh, that's not being replaced. So regardless of the metal price 5 years from now, a company like Newmont um, or anyone, Newcrest, they need to replace their reserves to stay in business. So if you only focus on and are able to acquire companies with projects that will eventually prove to be economic and be acquired by a major mining company, the metal price is not that big a deal.
Mhm. Well, you know what? This is a question I've actually never asked you before, and I've always been curious if you know of anything out there. As you said in many interviews in the past, it's getting harder and harder. Even so, even with what we're starting to see a little bit now, it's still getting harder and harder to find quality deposits out there that, are at surface. I think it's called greenfield, if I'm not mistaken. You
Yeah.
know, so people are having to go deeper and deeper to find, high grade quality assets. Is there any technology being developed to make it so that these companies can mine more economically?
Yeah, there is to a point. I mean, a company like Newcrest and Rio Tinto, they developed new methods to bulk mine underground deposits that have brought down the costs considerably. So, you can now find a large underground deposit, call it a copper deposit that runs 1.7% copper, depending on the geometry and geology, etc. That could be economic now, whereas 10 years ago it wouldn't have been because they didn't have the technology. Likewise, there's lots of incremental improvements in exploration methodology, techniques, geochemistry, geophysical methods. You can test it. So it is improving, but the bottom line is, 1 out of 1,000 prospects, more or less, turn into an economic deposit. And since we've covered the Earth so well at surface, it's going to become more expensive to find the economic deposits. Plus, if you consider a 1 gram deposit at surface is economic, a 1 gram deposit 300 meters beneath the surface is not economic. So you're going to be finding probably 5 to 10 times more uneconomic deposits than economic ones. So it's an issue. It's a real issue, which again goes to my point. I think that if you can locate a company that owns or is in the process of, delineating a deposit that might work, it's worth a lot of money.
All right, that's a great transition. What have you been talking about recently in your newsletter for those who may not be subscribers?
All right. Well, Joe Muzumdar, who is now running the newsletter, I'm sort of the senior advisor, if you will.
Mm-hmm.
And we go back and forth and everything's joint, but it's his letter now. I just opine, if you will. And the year-end review he just completed went through sort of what we did last year and in previous years and our thoughts. Some mistakes we made, some positive things we made, and changes we're making looking into the new year. And I think what we're going to be focusing more and more on is precious metals, which would include palladium, if we can find a palladium project, nickel, copper longer term, and less so on, I guess, lithium, battery metals, that sort of thing. That's sort of where we're going. But again, we're positive on the precious metal price. We're positive on nickel going forward because we can see the demand increasing for those. And copper, I don't know what's going to happen to copper next year, but certainly 3-4 years down the road with, the green energy coming in as being such a big deal, the electrification of the take a lot of copper, a lot of nickel.
Mm-hmm. So then, let me follow up on those two areas of the things that you are looking at and you're not looking at, because I want to know why. So you mentioned precious metals, nickel, copper. Why are we focused on that? And then likewise with lithium and other battery metals, why are you not so much focused on that in the near term?
Well, with precious metals, it's got to do with the U.S. dollar, geopolitical events, and the interest rates, all that sort of thing. That's why precious metals, and that's just not a gut feeling. It's everything I read tells me that's gold is probably a good place to be. It's a safe haven. It'll do well. In regards to nickel, there's a shortage of quality sulfide nickel deposits in the world, and sulfide nickel deposits are what you need to make batteries. So, and nickel batteries seem to be the one that's taking off. Cobalt, although it makes it for a good battery, your supply is very uncertain given almost all of it comes out of the Congo. Lithium, there's no shortage of lithium in the world, so there's no real push to get new lithium deposits going, and they're not going to be worth that much, except in select environments. So, for instance, nickel, we found a Australian listed company, Blackstone, which is, BSX on the Australian exchange, which both the Joe and I own. They've got a nickel deposit in Vietnam that they're developing. The key here is they have a memorandum of understanding with a large South Korean battery maker that wants to build a battery plant in Vietnam to make the batteries to ship up for their whatever they use the battery for to build in South Korea. So there's an offtake agreement there for someone who's going to buy the nickel and probably put the money in to fund the build the deposit. So that's the sort of thing we're looking for.
Mm-hmm. So, by the way, are we built? It sounds like you're building a new home somewhere over there.
Oh, I'm sorry. The neighbors are putting on a new roof. I can't do much about that.
Don't worry about it. So, so then I have to ask. I mean, you've already kind of talked about this a little bit so far, but I want to get kind of the full wrap. Is what would you say are some of the trends and catalysts then you're seeing for the junior resource space for 2020?
Discoveries.
Discoveries.
Certainly discoveries. You look at, I mean, they're rare, and what Joe and I spend most of our time on is finding the fatal flaw, because we know most are going to fail. So we've made actually a lot of money on projects that actually failed because, the initial stages, the geology looks right, the sampling looks right, they get some nice drill holes that say that maybe this is right. And we follow it in such detail that, the share price can go from 25 cents to $1. And then at some point, the work they're doing tells us there's a fatal flaw here, and we get out of the way. But we've seen stocks a lot of stocks look like discoveries go from, 25 cents to $2 and back down to 25 cents, happening a lot. So there's a real demand in the retail space for discovery, but there's not a real knowledge in the retail space in terms of evaluating the projects. And I think I think that's really key if you're going to get into the junior space, is to have someone you can work with and talk to that understands the business, the geology and mining, be it, a relative that's in the industry, a stockbroker, newsletter writer, just somebody that, if that's not your expertise, get some help. I mean, if I was going to be investing in biotech stocks, there's no way I'd do it on my own. I need, I don't understand it. I need help. It makes sense.
Gotcha. All right, so Brent, where can my audience go and find more information about you and Exploration Insights?
Right, website's explorationinsights.com. There's a lot of free articles we've written. Joe is compiling sort of a year-end review, next year review as well. If you send us an email via the website, we'll send you that article once it's complete. Mm-hmm. And I'm all over YouTube and Google, so.
And Twitter now, too.
Fortunately, you can see me.
I was going to say, and Twitter now, too.
Oh, yeah, that's a bit different. I caused trouble there.
Well, real quick, you mentioned 3 companies, Rio Tinto, Newcrest, and Newmont. Are you currently shareholder in any of the 3?
None of those 3. We generally stick to much smaller stocks.
Gotcha. All right, Brent, always a pleasure. Thank you for joining me today.
Thank you. See you around.
See you around.